Hey guys, good morning. Good morning. How's everybody doing today? I am a bit late today. I had to work on some stuff, some real life issues, but hopefully we can get a nice turnaround today. Like always, guys, feel free to post questions about stocks. That's what I'm gonna be doing here. If you guys want to take a look at any stocks in general, just put it in the chat. If not, we can take a look at recent news that's kind of affecting the market, some of the trending stocks. Let's get started. Let me just get everything set up real quick. Hope everybody's having a good Friday. I know the market is open already. So let's give me a quick second. The Karma, what's going on? NVIDIA. NVIDIA's one of my favorite stocks, the Karma. I'm not sure how much been following the stock. This is my tier 1 stock, and it's my biggest stock in my portfolio right now. I know. Let's take a quick look. Let me pull up. You should be able to see my screen. So NVIDIA right now, it finally broke again $700. I know the most recent news is this company is going to do the reverse split. So I'm super bullish in NVIDIA, the Karma. This is my number one stock in my portfolio. Like I mentioned, I think right now it's about 10% of my portfolio. The next biggest is somewhere around 7%. So it's definitely a good portion. The only thing I do want to say about NVIDIA is right now the stock price, even though I'm such a huge bull, I'm not planning on selling anytime soon. I do believe the stock price is a bit overextended. So maybe in the short-term movements, we might see a little bit more volatility. But in the long term of things, the Karma, for example, for future growth, this company, I believe in the next 5 to 10 years will be a multi-bagger, even at these levels. If we take a quick look at, NVIDIA does everything, right? They pretty much hit with their graphics card. It's something that's needed for everything that we're running right now in the world, and all these advanced technologies from fintech, machine learning, artificial intelligence, data centers, gaming, everything we need, cars, self-driving car, autonomous cars, smart things. So NVIDIA, I think it's a great play for the future. This company, right, if we take a look at fundamentals, this is a pretty big size already, right? 434 billion. Future growth, this company is expected to grow 11.3%. This is a company that's profitable, positive in cash flow from operations. Financially, they are in a great place. $12.7 billion in cash and $7 billion in debt. So NVIDIA, it's pretty much, like I said, tier 1 stock for me. The only thing is, let's say I didn't have a position in NVIDIA right now, because it's very overextended from its moving averages. I would just say there is a higher chance of a pullback happening, right? It has been quiet for multiple months since, I want to say, August. It hasn't really moved out of this channel. Overall, still fundamental, still super bullish on the company. I do believe in the short term of things, we could see a potential pullback. Are you in NVIDIA, Karma? And are you in it for a long-term investment, or are you in it for short-term investment? I'm actually excited you brought this one up. Very rarely I get to talk about NVIDIA. And if you ever want to get more information about me, the Karma, check my, just post my name on YouTube, and then just NVIDIA. I have so many videos out on NVIDIA. This is definitely my favorite semiconductor company. So are you, Karma, are you in NVIDIA right now? I can't believe it really broke up. It's up 1% for the day. My overall portfolio seems to be okay. A mixture of red and agree. What's going on, Alan? How are you doing, man? Hope everything's doing well. Agree, yeah. NVIDIA doing well per last earnings report. Gaming, AI, data center. This one, like I said, it's for the long term of things, right, Alan? I had no worries about this company. If this is one that drops a nice amount, I'm going to go and buy some more. That's how bullish I am in this company. For the long term of things, not worry at all. I think for the short term of things, we are gonna see some movements around. Quentin, hello. Hope you are doing well. Thank you. I hope you are doing well as well. NVIDIA, yeah, I have short call today and 2K plus now and planning to sell. I have a short call today. Okay, so you sold. Okay, so you sold the call. May I ask what you sold that call at? You can just give me the price, not the like the strike price you sold it at, not the actual price you sold it for. And 2K plus now planning to sell. Okay. So it seems you're more of a trader, D Karma, or a swing trader to some extent, right? Because even though I foresee, I wouldn't want to say foresee, even though I believe there's a higher chance of a pullback happening on NVIDIA, I have no intentions of selling at the moment, because this can continue to run up, especially with the news of the split, right? And Alan, thank you. Hope you are well too. Yep, I'm doing good, man. Appreciate it. So is there any stocks? I mean, right now, what do we have? The market is pretty good to me. Zoom is up 3%. NEO, I just talked about this in the video yesterday, is up 2.6%. C has made it to $275. I wonder if it's gonna break that high of 285 today. Celsius is picking back up, getting some stream after the overreaction I think happened yesterday to the stock. On the negative side, Unity, it's really trying to stay above this moving average. Unity is another one of my favorites. Right now it's down 1%. I'm happy though. I'm really happy how Unity has been performing lately in the past few days. Spotify is down 1.2%. What else do we have? Nothing's really down too crazy, which is pretty exciting. In the overall StockTwits community, I mean, I'm pretty Chewy. Oh wow, Chewy! Did they just report earnings? I know a lot of people are kind of into this whole e-commerce. I don't have pets, so Chewy doesn't really interest me. But it's down 5.17%. Then you have some of those, I want to say, popular stocks that have been happening lately, down super big digits, right? 22% on Galecto. We have, well, it's just crazy. Not too much information here in what's going on. Good morning. Thoughts on FSR versus Natalie. Good morning. Thoughts on FSR versus CCIV. So I want to say, aren't they? Which one is FSR? Let me take a quick look. FSR. So Fisker versus CCIV. You know, so I haven't really looked too much on Fisker. I've definitely been following CCIV a little bit closer. None of them are in my portfolio. I don't have too many EV stocks, right? The few EV stocks that I have are a small position in Tesla, a position in NIU, which is NIU, not confused with NIO, the other Chinese EV maker. And I also have a position in ACTC, which is Proterra, a small SPAC. So what do I have? What I personally, the first thing I would see is which one is more likely, which one is going to have a vehicle first. I do believe with these EV companies, I don't follow Fisker. I know CCIV is expected to have their vehicle out within this year. I'm not sure about Fisker. I think they are in the, let's see, Fisker, it's the, which one is their car? The Fisker, I just want to see which vehicle, the Fisker Ocean release date. The Fiskers are due to arrive towards the end of 2021 or early 22 at the latest. Apparently, all right. So both of them. This is one that's very difficult to kind of do any form of analysis, in my opinion, Natalie, because it's these are two vehicles that have yet to produce their product, right? This is what I would consider pre-revenue stages. And at pre-revenue stages, there's not much information we can really look at outside of balance sheet. So it would be like taking a look at their balance sheet. Which one is able to survive the longest without any need for funding? Which one probably has the better production? Which one has the ability to make more productions? Which one's able to produce more vehicles in the short term and then in the long term? So I don't really know too much about them. I know I do like CCIV to some extent. It's not in my portfolio, but if it was to ever enter my portfolio, I wouldn't be too mad about it. Let's say if someone got into my account and kind of bought CCIV, I wouldn't be angry that happened. Kai, what's up, bro? Kai here. What's going on? Can you check out LTCH? So let's take a look at LTCH. And actually, Natalie, let me help out with something. Let's take a look at price movement. So first, we can see both CCIV has definitely seen a crazy price movement. And again, none of this is advice; it's just my overall thoughts. The first thing I'm seeing is Lucid. It is a bit overextended from its moving averages, not crazily overextended, but something to take a look at. And if we take a look at FSR, how's FSR doing? FSR is pretty much looking a little bit more overextended. So the only thing I would say is both of them have a small chance of being. These two are going to be ones that are going to be very, very volatile for the next few months until there's an actual product. When companies like this, which are pre-product companies, tend to be very volatile to news. The Karma, AMC, and GME, those are two stocks I don't follow. The Karma, like I said, I'm more of a long-term investor. Short-term trades like that don't meet my criteria to put money into. Right? I don't think I wouldn't say they're a bad style. It's just not my style, the Karma. I tend to hold positions for long-term and try to see that wealth accumulate over time. So Kai, let's take a quick look at LTCH. What is this? So this is Latch. So first thing I am seeing is, right, crazy pullback. It seems like it's a recent IPO. This actually might not be it. Is this it? No. Yes, is this it? Kai, let me take a look. Latch Inc. What do they do? I'm kind of familiar. I want to get Latch Inc. Latch is now available under the ticker symbol LTCH. We built Latch from ground up. What do they? We make spaces better, places to live, work, and visit. How do they do that? All right, so they do. So it seems like they do a lot of smart items, smart home sensors, guest and delivery management, smart access. So this is creating a smart office, for example, and creating a smart home. So pretty interesting market, right? We can see, just first start thinking of the market. I can see this being a market that's going to continue to grow. I feel homes are the next state, right? I think right now, cars and homes are the two major players to become smarter. Where right now we're just hitting the surface, right? We have like Alexa, we have all these other smart home applications. But I think within the next 10 years, the products we're gonna have inside our homes are gonna be insane. So I can see this being a market that's going to grow for sure. So it hits the tick of being a cool market. Now let me see the overall. Let's take a quick look at the price performance. So Latch right now, it's seen a crazy correction, right? It opened up pretty high when it IPO. Seen crazy correction, and this seems to be a very volatile stock, right? In just a matter of 3 days, look how big this movement is. Was this a pre-SPAC, do you know, Kai, or was it just a straight regular IPO? Right now, I do want to say it is a bit overextended from its moving average. Let's take a quick look at some of their fundamentals. Hopefully there's some information here. There's not much information here. Let's see. Super small cap, right? So this is a market cap of $184 million. So right off the bat, Kai, if I ever see a super small company, it automatically gets placed as a tier 3, as a tier 3 stock. Just because, okay, so it was, all right, so maybe we can get a little more. This one really interests me, so maybe we can look at investors relations. They might have better information there. Let's take a quick look, and if you can find their presentation for me, feel free to let me know. So let's see, I'm trying to find a presentation for them. Stock information, quarterly results. Come on, give me a PDF or something. Events and presentations. Here we go. So Q1 earnings. So they actually just reported earnings a few days ago. Now this is pretty interesting. So it was TSI. So revenue right now, I want to know what was the actual market cap this company was given, because I don't think that 184 is the right. Okay, so it has a market cap of $1.88 billion. So we have to remember that. Super small. And from its year to date, from its 52-week high, the stock has seen about a 31% decrease. If it was a SPAC, it's not too crazily overvalued, right? It's $12, so it's 20% over its nominal price. So doesn't seem crazily overvalued from where they purchased it at. So let's take a look at their presentations. So revenue grew 143% compared to the same time last year, $6.6 million in revenue. I do believe this is probably going to be very similar to a gaming company where you prefer to see total bookings instead opposed to total revenue. So total bookings is 71.7 million and it's up 89%. So first thing we're seeing, this is definitely a growth stock for sure. Booked annual recurring revenue is also about 39 million for the quarter. So first thing I'm gonna say is their price to sales ratio for a company like this is pretty big. Other thing is, if you take a look at adjusted EBITDA, they are still losing money, so they're not profitable there. I doubt they are positive in cash flow from operations. Hopefully they share some of that information. No, they don't. So this is a very new stock, guy. If I was really interested in this market, and I probably would do a little more research later on, not too much here that I can really look at, maybe here in Analyst Day presentation. They might have some more information. So I want to see how much money they're going to get from, how much money they received from the acquisition. And here we can take a look. So Latch Promo, they're going to be valued at about $1.6 billion. TSI cash held in trust, pipe investment, Latch rollover equity. Cash to balance sheet would be about 450. So they have a nice amount of cash for sure. And let me take a look at they usually take a look at valuation metrics. I definitely would recommend taking a quick look at this. What do they expect? They expect to be a high revenue grower, right? In 2021, they expect about $308 million of total bookings. That's why I say for this company, total bookings is probably better to look at opposed to revenue. For 2022, they're going to expect to be $688 million. Normally, I don't go past 2023. After 3 years of estimated revenue, I think it's almost impossible. Like, these are, I want to say, obviously are projections, but these are projections that I think are somewhat viable. The higher you go, the more that gap of being right or wrong increases. So anything after 2023 is not. So taking a look at 2023 net bookings, the company is not too crazy, right? Too crazy overvalued. One has to just make sure that they really kind of hit these marks, and that's the real issue. The other thing is this company is not expected to be EBITDA profitable until 2024. So for about 4 more years or 3 more years, this company is not expected to make money. From their free cash flow, they're not expected to be free cash flow positive until about 2023. So if this was to ever enter my portfolio, Kai, this would be a tier 3 stock and no more. Just because I do believe there's a good portion of risk, but I wouldn't mind getting some skin in the game, right? The products that they hit, definitely cool. They have, so example, they have services. They work with like UPS. I wonder how they work with Lemonade. That's pretty interesting. They have their own software to kind of track, and they have devices from smart home products, sensors, cameras, and they also work well. They also interact with other companies like Google, Nest, Sonos. So this is definitely a cool market for sure, but very early on, Kai. Very early on. So something like this, I would just put, just because it's very early on its business, early on in its business from it's early on in its business to really take a look at heavy fundamentals. To Dariano, how about learning of valuations by discounted free cash flow? So that's not I feel like there's so many metrics or rules one can use to evaluating companies, right, Dudariano? I'm gonna just call you Duda or Rhino. Duda, Rhino. There's no right way. I personally am not a fan of discounted free cash flow, because for discounted free cash flow, you have to really, you got to do a lot of estimation on that future growth. And then you have to take in, you can't really put in mind of what kind of innovations a company is going to create within those 5 years of discounted cash flow that you are expecting this company to grow. So how would that affect the company? How do you keep in track? I feel like discounted cash flow, just like any other metric or any other valuation metric, there has to be plenty of estimations. And estimating, especially if you're not familiar with the market, if you don't know how much total addressable market, how much growth you can see, how much improvement the company can see, what kind of innovations they're going to make, you're just making a nice guess, and it's going to make you feel better because your guess kind of matches a great stock price. Again, there's other people that are probably pretty good at doing it, and that's their investment style. It's just not a way for me to work around it. And that's the great thing about the stock market. You can use different metrics, you can do different investment styles to kind of do your own valuation. As long as you stick with it, as long as you learn with it and become like a pro, then it becomes a great tool. But that's definitely not a method for me. So Ben, you want to take a look at Plug. So Plug right now, if we take a quick look, first thing I look is technicals, right? Technicals don't really determine if I buy or sell, and Kai, no problem. I hope it was somewhat useful. That one actually seems pretty interesting, Kai. I wouldn't mind looking at that stock a little bit more and later on. Let's say maybe I want to increase my exposure somewhere else. Now I have that one in the back of my mind. So the first thing I tend to look at is technicals. Technicals don't deter me from buying or selling. It just prevents me. It just kind of helps me out determine how much of a position. So yes, Doreen, very true, right? It is good for, I want to say, every metric right now is good for certain companies, right? So for sure, for a company that's already stable, that already you can really kind of see its projected path a lot better. It might work better for that, right? So maybe for a growth stock, which is most of the stocks I kind of invest in, there's too much movement going on. There's too much innovation. There's too much projection on where the stock can go, that it might not be the best method for me. But very true. I do believe if it's a stable company, but at the same time, a good thing to think about would be like Amazon, right? Amazon, 2014, I believe, was when they kind of released AWS, their cloud service. So Amazon at that time was already a pretty big company. Even though it was still growing at some levels, they were still innovating. So probably doing free cash flow, discounted free cash flow on Amazon at that time, you missed out on those AWS gains. So all types of metrics, I think, kind of also have some form of limitation, and you have to also remember, hey, what are some future innovations, and how can these future innovations really move these prices on the stocks? Well, I'm pretty sure there's plenty of examples of stocks out there right now. I'm pretty sure maybe Microsoft might have been the same way, as they released Azure, their cloud-based product. Right, Microsoft has been a monster nonstop, and pretty much. And I wonder how a free cash flow model would have looked before we seen these like this Azure projection on the company. And Apple too, right? Apple, another one that I feel has been pretty stable, but they have recently just started. The amount of money they're making from their services, from their application stores and all that. I wonder how that would have looked in a discounted free cash flow model. And those three companies just a few years ago were already matured to some extent. But I guess it might be good to kind of use as a baseline, a baseline of maybe what I'm willing to pay for a price. So here, taking a look at Plug, right? First thing I'm looking is the stock is not overextended. Again, looking at technicals doesn't deter me from buying. It doesn't push me to buy. It just determines if I want to enter a position, how much am I willing to enter. So let's say I was super bullish in Plug. At these levels, I wouldn't mind entering with like a medium-sized position. If it's overextended like it is here, I believe there's a higher risk of stocks going down. So even if I was bullish here, I still wanted to enter, I would only enter with a small position. And that's the great thing about here investing in the United States. We have free trades, so no commissions, and we can even do fractional trading in some brokers. So let's take a look. So Plug, not overextended. Now let's take a quick look at fundamentals. I don't really take a look at the actual company. Ben, we're only going to take a look at fundamentals and technicals, but it could be a whole different market in form. It could be in a whole different way of market. So Plug Power, they provide hydrogen fuel cell solutions for the electric mobility and stationary power markets in North America and Europe. All right, so they are in the hydrogen fuel, and they are both used for vehicles and it seems like home as well, or some form of stationary market. $17.9 billion marketplace. So this is a nice size company already. Future growth, this company is expected to grow 42.1% on average for the next 3 to 5 years. So this is a nice growth stock. Unfortunately, it does seem like COVID it does seem like COVID might have affected this company. Not COVID, actually. COVID was, where was COVID? Here. So even then, it wasn't. So for some reason, September to December, this company took a really big hit in this most recent earnings, and that's something investors should definitely try to understand what happened here, Ben, because this is not COVID related. So this is automatically a red flag. Why did revenue drop so much? Why did earnings drop so much? This is a company that's not profitable, not positive in cash flow from operations. So right off the bat, this is something I would consider a speculative play. Speculative plays are not bad. It just means that they have higher risk to them, in my opinion. So if I was to ever open up a position in this, it would never be a big position unless I was a major bull. If we take a look financial health, this is a company I would want to have super strong balance sheet. They have $1.3 billion in cash and short-term investments and about $261 million in debt. So the balance sheet looks pretty good. Strong future growth. So this is more of like a speculative growth play. Not something, the energy market is not one I'm too interested right now, but overall doesn't look too bad. At the end of the day, this was to ever enter my portfolio, it would be a very small position based on it being not positive in cash flow from operations and based on it not being profitable in earnings. Again, if you are an investor of Plug, I would want to find out what happened here. Why such a huge drop in December 30th of 2020? And have they reported recent earnings? It doesn't seem like they have. I don't have information here for March 31st of 2021. Jack, what's going on? Thanks, buddy, for your videos and streaming. What do you think of current prices level on Facebook? Don't you have a position? Yeah, so I do have a position, Jack. I do have a position in Facebook. And let me see, I am going to take a look at the other stocks you guys mentioned. Jack is asking a very simple question, so I'd rather just answer that. So Facebook last year, every year I tend to have like tier 1 stocks. Last year on 2020, Facebook was a tier 1 stock for me. Tier 1 stocks are my favorite, are my best. What's going on, David? Tier 1 stocks are my favorite stocks out there. Those are the ones I usually have the bigger positions. So for 2020, Facebook was one of them. On 2021, unfortunately, Facebook didn't make that list for me. I actually cut down that list to only 4 stocks. I actually might be adding one more stock this year right now to my tier 1 position. So it will probably be a five tier 1 positions. There'll be 5 tier 1 stocks. But Facebook right now, one thing I am seeing, the stock price, I personally would say, is a bit overextended compared to its moving averages. Again, this doesn't kind of scare me off. I'm not going to share any Facebook stocks. I haven't sold any Facebook stocks. Even if I believe right now there is a higher risk of the stock pulling back, if we take a look at some valuation metrics, it's still cheaper compared to like all the other FANGs, right? And Facebook, I know a lot of action is happening with the augmented reality, with virtual reality, and that's markets that I am very bullish on. So that's why I have no intent of selling Facebook. Right now, let's say I didn't have, Jack, let's say I didn't have a position in Facebook, how would I play it? Because it is a bit overextended, and let's say I am bullish in the market, right now is where I would open up a small position and add up throughout the weeks. This allows me to, hey, still get some skin in the game, and but I understand that it is a bit overextended, so I could expect a potential pullback, but at the same time, I'm still building a position. If it looked like this is when I would open up a heavier position, and I've actually done that with a lot of stocks. Yeah, so if we take a look, so all right, if we also take a look, what are, Jack, my tier 1 stocks for right now are Unity, C Limited, Cerence, and NVIDIA. Those are my 4 tier 1 stocks. The next one, the one that I believe has the potential of making it into a tier 1 stock position size, is actually Shopify. Shopify is becoming my 5th favorite right now, and it's one I'm looking to really add a position. So those 4 stocks kind of make up more than 1/3 of my portfolio. But let's take a look. So Facebook right now. Let's take a look at forward. Let's take a look at forward price to sales ratio. Oops. Not price to sales ratio, PE ratio. Forward PE ratio. Just to see how this company is looking. So yeah, so very, very true, right? So PE ratio for Facebook, if we take a look, it's sitting right now at 25.25. These are last levels seen somewhere around May, I want to say May, June of 2020, so about a year ago. But they are still a bit higher than they were pre-COVID. We can see January of 2020, they were closer to like 22.5. So it's not completely low if we take a look at forward PE ratio, but I do think the company is it's a lot better than it was before, right? Their overall movement into we know now they're more aggressive in the virtual reality realm compared to January of 2020. We know they're now focusing a little bit more in the augmented reality as well. So I would say that it's not, even though it is a bit higher than pre-COVID, there is a reason for it, right? And let me take a quick look at EV to EBITDA forward. This tends to look sometimes a bit different. It looks the same, right? It is a bit higher than January of 2020, right, Jack? But it's still lower than where it was when this overall crazy correction in stocks were happening. But overall, things look good. Not too, I wouldn't say it's not too undervalued at the moment compared to historicals. There have definitely been better purchasing times for Facebook, but it's not also overvalued to where it's been at. So let's see, what other stocks do you guys want to take a look at? Like I said, feel free to post in the comments. And if I am providing some form of value, guys, make sure to hit the thumbs up. It really does help with the overall channel. And make sure if you're new to hit the subscribe button. I normally take a look at stocks. I do about a video to 2 videos a day plus a live stream. And I'm trying to provide some form of value to you guys. I'm also learning along the way. I've been investing for about 7-8 years now. And I'm still learning every single day. So I hope to share that knowledge with you guys as much as I can. So good morning, Polly. Neo, really, is Neo flying? I'm not fan of. I wouldn't say I'm not a fan of Neo. I don't have any position in Neo. Nice, Neo up 5.4%. It's because they watched my videos yesterday where I talked about Neo, and they got confused with Neo. So what do you think? And guys, if you guys, there might have been some I missed, feel free to post them again. Good morning. I saw Kai. What's going on? Another Kai Anderson. Welcome. What do you think about Palantir? So Palantir is definitely a stock I've seen plenty of investors that I follow be very, very bullish on. Not a position I have. I can obviously see that market, right? That overall big brother state of market is one that's very, very hard to penetrate. So just alone in the market they're in, they have created some form of almost impenetrable walls to some extent, right? Obviously, any business can always have some form of competition. I think for Palantir, that's one of its biggest pros. It's very, very hard for a company to come and even do what they're doing right now. If we take a look, the stock right now definitely seen a crazy correction from what's at, and it's definitely seen a nice pull up from its lows. Overall, I don't believe the stock is overextended. So if I was ever bullish in a stock right now, I wouldn't mind entering with this medium-sized position. So not overextended. Again, these are not advice. This is just my overall thoughts and how I handle it based on my investment styles. Market cap of $45.3 billion, right? This is a huge company right now, expected to grow 25.4% on average for the next 3 to 5 years. So this is hyper growth stock. This is one that has just finally become positive in cash flow from operations. Taking a look at trailing 12 months, that's actually pretty impressive. I like that. They're not expected to be GAAP profitable anytime soon, but I'm liking that trailing 12 months, cash flow. So that's looking pretty good. If we take a look at their financial health, financially, they're looking pretty good as well. $2.3 billion of cash and short-term investments and about $200 million in debt. Fundamentally, in a great place. I like it, right, Kai? Strong future growth, strong balance sheet, positive in cash flow from operations. Based on fundamentals, if I was bullish, really bullish in the market, I can see it being like a tier 2 stock in my portfolio, right? At the moment, it's not, and I don't think of having any ideas of buying anytime soon. I do want to say the biggest risk for Palantir is most likely going to be its valuation metrics, right? If we take a look at, for example, forward price to sales ratio, 23, right? 23.96 for it. Let's say we compare this to a software stocks. Most software stocks pre-COVID used to have a price to sales ratio of about 10 or lower. 10 used to be like the highest in like software companies. So 23.96. I want to say this is probably one of the biggest red flags for it. So it means that maybe in the next year it might not provide the best returns. Doesn't mean it isn't either, right? It could continue to go. But I want to say just the biggest risk behind it, it's its current valuation. But if this company is expected to grow at crazy levels, that price to sales ratio is obviously going to continue to go down. And Kai, man, Anderson, you missed it. We actually just did Plug Power, I want to say about 30 minutes ago. I think someone, I forgot who mentioned it, Bin, just wanted to take a look at it, and we actually just did. So I don't know if you want to wait for after the stream to just take a quick look back at it, where I just do a quick, very similar quick look at it as well. So CL, how about growth and value ETFs? So CL, that is a great question, right? I personally believe, Philip Bryce, SFT. All right, that's the one we're gonna take a look at next. Let me open it up for you. Let me just answer at CL's. We'll take a quick look at CL's question. So he's talking about value ETFs and growth ETFs. First, I do believe, especially if I personally enjoy learning about stocks, right? This is, I wouldn't say now, pretty much my day job, just looking at stocks in general. So I have a lot of time in my hand to really learn about the stocks, to really learn about how they're moving, the markets they're doing. If I just wanted to invest and didn't have the time to kind of study companies, I would personally do ETFs instead. And I would most likely, because of my investment style, CL, I would go with like growth ETFs. I do tend to follow some ETFs. So here in my watch list, I have a few that I tend to look at. It doesn't mean I follow them. I have any of these. I don't believe I have any ETFs in my portfolio. All my stocks, all my portfolio positions are actually individual stocks. But here are some cool ones. If I wanted to look, for example, for a gaming ETF, GAMR is one that I look at. Obviously, all of ARK positions, because they are innovative and I kind of like that growth style, all of ARK's positions are pretty cool. Other ones, so Deep Value, Roundhill, I believe, has some cool ETFs. So they have Deep, which is Deep Value ETF. I think they are the ones that create that whole Nerd. So Nerd is one that focuses on gaming. Roundhill is probably one of my favorite ones that I look at. They also have like subs. This is a lot of streaming services like Netflix, Netflix, Disney Plus, Spotify. That's a lot of Roundhill streaming services subs. What else? They also have bets. So ARK and Roundhill, I believe, have a good position, a good amount of ETFs out there. In specific markets, and that's where I believe the best ETFs are at, in my opinion, right? Not advice, are when you invest in an ETF within a market you're bullish on. So let's say I was bullish in the space race or space companies. I have a few, right? So I have UFO, which is an ETF about space, a lot of space stocks here. Then there's obviously ARKX. If I was bullish in the gaming industry, I would buy either Gamer or Nerd, right? These are some big players in the gaming stocks. And pretty much, I do think Google is a great tool for you. If you're ever looking at ETFs, you can just put like green energy ETFs, and they'll show you all the positions, some of the green ETFs, green energy ETFs out there. Like I mentioned, with my investment styles, and I believe getting in ETFs that are market specific have a better chance of providing better returns opposed to the overall market. So I personally would invest in like maybe 5 different market ETFs opposed to the SPY, and I would choose 5 specific markets that I'm very, very bullish on. And then let's say you probably have no idea on what markets to invest in, then obviously that's when I would personally just invest in the SPY and in the overall market. So what do you think about Skillz right now, Kai? Let me take a quick look. I'll answer your question. Let's take a quick look at Philip real quick. He wants to take a look at SFT. So SFT right now, first thing, Shift Technologies. This is this the car company or the home company? I feel like I've looked at them before. Shift Technologies. Is this a okay? So this is the overall. This is the new fashion way to buy a car. Easy online purchases at home delivery, fair, no haggle pricing, 7 days. So this is another online marketplace for vehicles, right? I think this one is a bit smaller than some of the other players out there. But you can see shop cars, sell or trade. You can find different vehicles out there. It seems like they also deal with the financing model. So pretty easy market to understand for sure. So now let's take a quick look at the stock. So Shift, SFT. First thing I'm seeing is this company it was a SPAC, right? And it's actually under its SPAC price. That's pretty interesting. So you're getting in at a cheaper price than those SPAC investors, which I think is pretty insane. This stock has gone pretty high, almost $15. And excuse me, guys. And Stelios, SoFi. I really do enjoy SoFi. We can definitely take a look at that one. And David H for sure, Rocket. So first we can see, right, crazy pullback. Right now, definitely not overextended from its moving averages and sitting at a great volume price. Again, it doesn't mean the stock price can't continue to go down. Obviously, the stock price can go down, right? Price, Bryce. So it's possible. When I see technicals like that, I believe just a portion of the risk has been eliminated. So right now, the company's market cap was $700 million. If we take a look at future growth, this is one expected to grow 45% on average for the next 3 to 5 years. So this is a nice hyper growth stock. The company is not profitable right now, and they're not positive in cash flow from operations. So right off the bat, this is more of a very early growth stock. Very early growth stocks are where I tend to call speculative plays. Again, I feel like I have to change the name of that because speculative kind of is deemed like a negative term. I don't mean to call it a negative term. It's just there's a little bit added risk to it. Remember, it's not profitable. It's not positive in cash flow from operations. So it still has some way to go. It still has to prove itself to me. There's a difference between speculative and growth, in my opinion. For me, I would consider growth stocks ones that are still growing at strong levels, but have already shown me that they can make money from their everyday business. So there's a difference. I have like speculative play, I have growth stocks, then I have value growth stocks to some extent. So this one would make it to the higher risk. A company like this, I want to make sure it has very, very strong financial health, right? So they kind of do. They have $177 million in cash and short-term investments and about $30 million in debt. So they are pretty strong in financials. I wonder, when did they kind of merge? If they merge before March 30th, if they merge after March 30th, their balance sheet is actually a lot stronger than it is now because they kind of got those funds. So when did the merge complete? Shift merge date. All right, so the merger date actually came out a long time ago. So their balance sheet is not going to go any higher from that. So overall, pretty cool. Strong growth. This is a speculative, would be a speculative play. Another thing I would keep in mind off Bryce is there's a lot of competition in this market, right? We have Carvana, we have I forgot I think there's like 2 other players. Carvana is the only one I can think of right now, but I know there was another player as well outside of Shift. Room, I believe. So just there are, this is definitely seems to be a market that's expected to grow. That's where we're seeing a lot of companies out there coming in. If you see a lot of companies coming out, it's because the market is out there and they believe they can continue to make money. Only thing I would say is this: not all of them are going to be profitable, right? Not all of them are going to make it. Some of them might fail. So that is that other added risk with Shift, especially since they are early on. If this was to ever enter my portfolio, it would be a tier 3 stock. Price doesn't mean it might be a bit higher for you. For me, based on my risk tolerance and based on what I'm seeing, it would be a tier 3. I don't think it would go any higher. And tier 3, right? Tier 3 positions are super small position in my portfolios, but even small positions can really move a stock. The perfect example, I talk about it almost every day, is Celsius. Celsius was a few $100s in my portfolio when I first bought it in the teens. It's been over a 500 bagger for me, and it has become one of my biggest portfolio positions just on pure gains. And that's that it was a tier 3 stocks. So tier 3 stocks are ones that, even though they start off as small positions, if they really become a multi bagger, they can really move your portfolio. So what else? Kai, you want to take a Anderson? What do you think about Skillz right now? So Skillz is another one. Let's take a quick look at technicals. I do have Skillz in my portfolio, so let me just say that off the bat. Stock right now, it was a bit overextended, kind of pulled back down, sitting at these levels. I feel like this is another stock, Anderson, that's going to be very, very volatile. It's very early on in its stages. For me, if I take a look at technicals for Skillz, they are what I would also consider, a speculative play as well, right? So this is a company that's not profitable, that's not positive in cash flow from operations. But they do have a very strong balance sheet, right? Plenty of cash compared to no debt overall. So fundamentally, they look great, right? So they have a strong balance sheet, even though they're not profitable. So for me, Skillz is a speculative play. The reason I am in Skillz is because of the future growth potential. I really could care less about the games they have right now. I think when Skillz becomes a better platform and they start adding some like crazy mobile first-person shooters, some very popular games into their platform, that's when Skillz has the ability to be a huge multi-bagger. So right now, based on the games, again, most of the games I can agree are pretty much a crap show, right? It's not games I personally would pay. But that's not where I see Skillz right now. For me, Skillz is one of those positions where I can kind of see the future potential growth. And if they go there, they could be a Celsius for me, where even a small position can become a really big player in my portfolio. So that's how I'm playing Skillz. I don't know if I said Shift by accident. That's how I'm playing Skillz. And over time, who knows? I might add on to my position. At the moment, I don't think I am. I don't have any intentions right now, just because I have other players to add on to. Lisa B, hello. I think you did a video comparing SFT and other companies about 6 months ago. It was really in-depth and helpful. Lisa, that's pretty funny, right? I do so many videos a day that I sometimes forget what stocks I talk about, just because I'm always trying to get new information. I know I've talked about Shift, and I kind of looked at it now. Now you're reminding me, Lisa, that I saw their chart. They kind of talked about the other car companies as well. And I also kind of saw data of which car seller has like newer vehicles, which one has older vehicles, which one had more productions. So definitely agree. So Philip, if you want to take, was it you that wanted to take a look at it? Let's see, maybe let's go to YouTube and let's put Jose Najarro Shift. Maybe I didn't. Is it SFT? So I kind of do. So here, 4 months ago, if you put Jose Najarro, Philip SFT, I do a little more in depth on it. Where was it? SFT right here. So let me just share this with you. Obviously, guys, this is an older video. You can see different camera lighting. But yeah, go check it out if you want to learn a little bit more of my thoughts on SFT. For sure. So Lisa, thanks for reminding me about that. And normally, guys, if you ever want to take a look at any stock I've talked about in the past, feel free to do it. And I kind of do like monthly or every 2 month a portfolio update where you can see all the stocks I own. And also on my Discord channel, I post every time I buy and sell. I try to be as transparent as I can, right? I'm not charging anybody anything for any of the information I'm showing. This is pretty much just my opinions. But at the same time, I still want to build like a connection with the community. So I try to be as transparent as I can. So what else? One stock I'm watching, you know, MUDs, Polly. I have taken a look at MUDs before. Like I said, I think so. I'm pretty sure I have. Yes, I have. Polly, so one stock you're watching, no position at this point, is MUDs. I do enjoy MUDs just because I can see the sports car company really growing, right? I was in, I think the collectors market is one that's a very boring market, especially car collecting, but it's a market that's growing still, from Pokemon to sports car to everything else. Right now, it's kind of entering into the NFT market, but MUDs is also entering that market as well. Or Tops, whatever, Tops, right? So Tops is definitely a pretty good play for collectibles. Very, very boring market. I don't believe many people want to follow it. I think the only reason it's getting some attention right now is based on its NFT plays. But overall, I like it, and I wouldn't mind if it was in my portfolio, if I'm not gonna lie. First, let's take a quick look at it. MUDs is still in acquisition stage. It's pulled back a nice amount from that overextension. 1220. So overall, I want to say if I wanted to enter a position, now wouldn't be a horrible time to buy. If you want to take a closer look at those fundamentals that I've looked at it, Polly, definitely check out that video. Just put Jose Najarro MUDs and you will find it. So Jose, what stocks would you buy at this moment? Your top 3. So Kai, I actually just bought 3 stocks yesterday, and like I said, I post on my Discord channel every time I purchase. I'm not a rich guy at all. So every week, I only put a few $100s into the market. I'm not a big YouTuber like most people out there where they tend to buy like thousands and $1,000s a day, right? I can't do that. I'm still a normal human right now. So I only get to put a few $100s per week on the market and continue to grow my portfolio over time. The 3 that I purchased were Shopify, CrowdStrike, and Twilio. Those are the 3 that I bought. So if you're asking, Anderson, what stocks would you buy at the moment? Those would probably be my 3 right now that I would buy right now. Obviously, my tier 1 stocks are NVIDIA, Cerence, C Limited, and Unity. So I don't at the moment, I haven't purchased any of them, just because I already have a big position in them. I entered, yep. So if you go to my Discord channel, there is one place that I call right here on the left side. It will say overall accounts. That's every week or I kind of changed some stuff with my income. So there were a few months. There was almost a month where I didn't buy anything just because my income had changed a nice amount. So I had to think back about my financial self before investing again. But now things are back to normal to some extent. So I'm back to investing, just not at similar levels, just because, again, it's not that I'm seeing any bearish reasons in the market. It's just more of my financial lifestyle right now, right? So, and if I ever felt like I felt any bearish reasons, I would definitely kind of talk about it in that Discord channel. Shishu, Jose, do you follow any stock YouTubers? So this is gonna be weird, right? This YouTubing stuff, it's like a business for me. So when you own a business, I would say this, I don't follow other YouTubers. There's in form of investment styles. if I look at other YouTubers, I see other YouTubers in the stock world doing well, and I try to see what they're doing in forms of maybe like thumbnails, in forms of titles, in ways that I can improve. So I use them more. I follow other YouTubers for more of business improvement outside of investment improvements, which is pretty weird, right? For me, and I guess it's just my overall learning process, I tend to learn better by either talking about it or reading about it, not much by watching. So I'm just not a big fan, not a big fan. I just don't like the video content, which is weird for me learning personally. I like talking about it like I am right now, or I like reading about it in forms of other analysis or style, in forms of reports instead. So if you guys ever see in my YouTube search, I might have searched like other I might have searched other YouTubers, but it's much stock YouTubers, but it's much more just to learn about how I can improve as a business sense. What is David H? What is your exit strategy? So first, exit strategy. This is a pretty tough one, right? If most of my stocks, I invest for long term of things. Price action is never going to be an exit reason for me, David. A reason for me to sell out of stocks would be if the company is no longer the company I invested. So that's one of my investment thesis. Normally, though, I give a company about 2 quarters ahead of two bad quarters before really deciding. I do believe 1 quarter is okay. A company can't really change in 1 quarter, but 2 consecutive quarters do tend to now that's like, okay, you're no longer the business I impacted, or maybe they're shifting their overall market. So that would be one reason for me to exit. Something I have been studying lately, David, I don't know how much I'm going to implement it, would be a hedging strategy. Most of my growth stocks are very, very volatile. And if another correction does happen, it can really hurt my portfolio again. So I have been trying to learn hedging strategies. At the moment, I wouldn't say I've mastered any, but there's some I am going to try to incorporate to some extent in the future. Maybe not a full hedge, maybe just try it out to see how it really works. I am a firm believer of sometimes you have to get your feet wet to kind of get that experience. So that's what I want to do in the future, kind of do a hedging strategy. Again, this is not something everyone should do. And it's just like I mentioned, I have plenty of time in the market, so I can, and this is pretty much more like a day job to me now. So I'm really able to keep track of things. If I wasn't able to, then maybe a hedging strategy wouldn't be something I do, just because in the long term of things, I believe stocks will return, especially the stocks I invest in are ones that will do better. What else? So stock price isn't a real reason for me to sell out of anything. Maybe if, let's say, we've seen crazy corrections in certain stocks. Let's say I see a crazy correction in NVIDIA, which is one of my biggest positions and one of my favorite positions. If I see a crazy correction and I have no cash at hands, I might sell some of my smaller positions to build up my position on NVIDIA, just because I believe that stock can do amazing returns in the future. So those would be my main exit strategies. Besides that, technicals are nowhere near. It's more just fundamentals based, David. And Chris, hey Jose, keep up the good work, man. Thank you, Chris. Appreciate the support. Guys, if you're here, make sure to hit that thumbs up. It really does help with the overall channel. Mark Chin, what are your tier 1 stocks? So my tier 1 stocks: Unity, NVIDIA, C Limited, Sorrent, and the one might make an entrance to my tier 1 right now might be Shopify. I don't know yet. I don't know. It might make it there. Sorrent. So it's this is ticker CRNC. They are most of my tier 1 stocks, unfortunately, right now are, I would say, a bit overextended. So they are, I want to say, I don't want to say high, they're bad. I just believe there's a higher risk of some of them kind of pulling back. So we have C Limited, right? C Limited, the overall e-commerce giant, the overall gaming market. Their games are, Free Fire is doing amazing here in the United States. Then you have, what else do we have? We have NVIDIA, another big player, like I mentioned, pretty overextended. So these are ones that, even though they're overextended, I could care less. Overall, I do believe they are going to do great in the long term of things. The other one, so NVIDIA, the graphics card monster. Then we have Cerence. Cerence, very similar, has seen a nice pull up and then a nice pull down. This is in the artificial intelligence voice. This is in the artificial intelligence voice market, mainly in the automotive right now, but they are expanding into other markets, which I find pretty awesome. And then I would have to say Unity is the fourth. So those are the four ones. And then Shopify has the ability of making a tier one stock in the near future. I've been adding on to this one, and I do. If I ever see a crazy correction, this is one I wouldn't mind going heavy on, very heavy on. So David H, what is your, okay, so first let's take a quick look at Ring Central. Ring, I believe, Central. So yeah, I do believe that's always the hardest question, right? RJ, when to start a position, and that's why I do believe that for me, dollar cost averaging has helped me out so much. Dollar cost averaging allows me to, especially if here in the United States, with free trading, I'm able to open up even a small position over time. So Unity, for example, RJ, was one that I was super bullish on. And during this uptrend, I added small positions here and there. I believe I even added like in 130s and 140s. And I'm not ashamed to say that. But when it was over here, this stock was only like 1% of my portfolio, no matter how bullish I was in the company, because I saw it was a bit overextended. When the stock price saw this crazy correction from being 1% of my portfolio, I took advantage, and now it has become like 5, 6, 7% of my portfolio because I bought in pretty heavy at these levels. So sometimes getting some skin in the game can kind of help out a little bit with FOMO to some extent, right? Many investors might say I FOMO'd out here by buying, but I only bought small positions over time. And it helped me out not buying a big position. But then when I saw this, it's like, okay, Jose, time to really open up. So Mark, given the semiconductor shortage, have you invested in any other semiconductor stocks like TSM? So right now, the only major semiconductor companies I have, Mark, are gonna be NVIDIA and AMD. Those are the only players I'm playing in the semiconductor. There are a lot I like as well. So TSM is definitely pretty interesting. NVIDIA and Semiconductor and NVIDIA and AMD, both of them make up almost 15% of my portfolio just on those two stocks. So I'm already 15% on semiconductors. Main reason I don't want to increase my exposure into other companies, but we've seen like Avgo, Avgo is that QCOM as well, TSM. Those look pretty interesting for sure right now. ASML, I believe, is another one. But right now, my two main players and the two I'm happy with, Mark, are NVIDIA and AMD. I don't believe I have any other strong semiconductor players besides those two. I also have this very small company called OSS. I wouldn't consider them a semiconductor producer. They're more of a graphics card accelerators, and they do create a lot of products for data centers and cloud on the edge. Very small company, tier 3 stock in my portfolio. I think it's less than 200, maybe it's $100 million market cap. I do believe this is one of my smallest companies, but it's a pretty cool market. And if you want to learn more about OSS, definitely go to YouTube, put Jose Najarro. YouTube, Jose Najarro, OSS. So I've talked about this in the past. I forget where it's at. I don't know. I know I've definitely talked about it. I talk about it here, where I made some mistakes like Cyberpunk, right? Cyberpunk is a stock I had in my portfolio. I sold out. Sometimes you make mistakes in this investing world, but that's why I enjoy risk tolerance. Cyberpunk was a small position in my portfolio. I forget what it was, what company it was. But I believe I sold out. I'm 100% sure I sold out of it. Sometimes a winner, sometimes we're losers in this market. But overall, the ones I'm very bullish on are the ones that hold big portfolios. Mark, appreciate it. And if you ever want me to take a look, CD Red, thank you, Kai. So that's one I messed up in, right? it was a loser in my portfolio. I'm pretty sure it's out of my stocks, out of my portfolio. CD Red. I and like I mentioned in all my videos, I talk, hey, this is either a tier 3, tier 2, tier 1. And I kind of try to do portfolio updates as much as I can. And in my comments in my Discord channel, I try to post every time I buy and sell in the market. So I try to be as transparent as I can. Sometimes I have big losers, sometimes I have big winners in this market. But the thing is, those big winners outpace the losers, and that's why I believe risk tolerance levels is such a great thing to understand in this market. So OSS, right? Super small cap. This could be a big, could be a loser, but if it's a winner, it's gonna be a big winner for sure. Anderson, thank you again, and I could be wrong, so always do your own due diligence to some extent. I try to provide as much as I can, but there might be things I overlook. And there are certain markets, right? By education, I am in the technology market, master's degree in electrical engineering, so I know a lot about the semiconductor industry. But if I'm talking about the biopharma go, that's probably like, I probably shouldn't watch this episode. Normally, I wouldn't talk about biopharma or any form of medical, but the semiconductor and gaming, right? Those are the ones I'm really into. So let's see, what else do we have? Any questions? I know you guys want to take a look at stocks. David, you want to Ring Central. Actually, we were looking at Ring Central before I went on a rant. So Ring Central, hopefully you're still here. Who was it? Stelios. So Ring Central right now, the stock price. Oh, so RJ, yes, for sure. So AMD, I mentioned this a little bit in my videos and some of my streams, RJ. Even though I'm bullish on NVIDIA is my #1 position and my tier 1 stock. I do believe AMD is one that is being slept on right now. So AMD is already a big position in my portfolio, but if I had to choose one right now for the next 12 months performance, I believe AMD will outperform NVIDIA in the short term of things. I think AMD right now is sleeping. People are sleeping on it. They're talking too much about NVIDIA, which I like because NVIDIA is a #1 position in my portfolio. But I do believe AMD, if I had to choose one right now, let's say I had to choose which one I would open up a bigger position right now, I think AMD would be one I would open up a bigger position right now. I would still obviously open up a position in NVIDIA. In the long term of things, in the next 5 years, I think NVIDIA will outperform AMD. In the short term, within the next 12 months, and I could be wrong, I do believe AMD will outperform NVIDIA at the prices we're at right now, at 11.53 on July 11th of 2021. Long term of things, though, I do believe both stocks are in my portfolio, big position players. No intent on selling both of them. No intentions of selling them. Even though I believe AMD will perform better than NVIDIA in the next few months, I am not planning on selling any NVIDIA to buy AMD. But maybe if I want to increase my overexposure, AMD would be the one I would improve right now. So Ring Central, first thing I'm taking a look at, right? Stelios, and sorry, I keep feel like I keep teasing you. I keep bringing it up and then going off somewhere else. But Ring Central is, I would say, nowhere near overextended. It's kind of sitting near a short-term moving average. If I was very bullish in this company, let's say I was really bullish in Ring Central, now is the time when I really get in, right? This is the time when I believe a good portion of the risk has been eliminated. So again, the stock price can continue to go down. This is more understanding how its earnings are doing and the market is doing. But if all that is doing great, now would be a time where I would really open up a position, right? I wouldn't mind entering pretty big. So Ring Central right now, $24.4 billion market cap. This is a software company. They provide software as a service solutions that enables businesses to communicate, collaborate, and connect. My first thing I'm going to say is I don't follow this company. I don't follow this market, right, Stelios? But I would want to ask, just based on their summary, is Zoom a competitor of them? If so, how much is it affecting the market? That would be my first question, right? We know Zoom right now is a big player. Again, I don't know much of the market, but look, expected to grow 20.3% on average for the next 3 to 5 years. A nice growth stock for sure. They're not profitable, but I'm gonna guess they're positive in cash flow from operations. And they are, right? Minus this minus these few quarters, they've had historical, excuse me, whew, too much talking. They've had cash flow from operations profitable in the positive in the past. These past few quarters have been a little iffy, but they are expected to be positive cash flow from operations there. So that fundamentally they're looking good. Strong future growth expected to be positive cash flow from operations within the next few quarters. Taking a look at trailing 12 months. Now, if we take a look at their balance sheet, they have about $463 million in cash and about $1.4 billion in debt. So this is something I'm not a huge fan of. Stelios, right? They are a bit leveraged. Leverage companies are ones, especially if you're barely profitable right now, barely positive in cash flow from operations. That's the last thing I want to see. They are almost what, 3 to 1 leverage. They have 3 times more debt than they have $3 of debt for every $1 of cash. Maybe this debt is not due to the future. This could be very short offerings. Senior notes not due to like 2030. That's something an investor should really take a look at, see when that debt is due. But looking at it being leveraged right now, not a huge fan. This is probably one of my major red flags for the company right now, Stelios. Based on it, strong future growth, but for me, as talks of inflation might continue to go up, interest rates might continue to go up. The last thing I want to have is a company that's over leveraged, because that means they're going to be paying more on their interest rates. Are going to be paying more on that debt. So technicals look okay, right? We saw technicals; they looked okay. Fundamentals, the balance sheet was probably the biggest red flag. Maybe let's take a look here at Ring Central. Let's take a quick look at for their price to sales ratio. If you take a look, they are at levels last seen not pre-COVID, like around May or January or early of 2020. So in forms of valuation metrics, they're not too crazy. They're not too bad. Maybe they might have EV to EBITDA. Let's take a quick look. EV to EBITDA forward. Yep, they do. So let's cancel this out. So outside of this value, don't care about the 123. What I'd like to see is the overall, how it's gone compared to itself. So right now, its EV to EBITDA forward ratio is sitting at levels last seen before May of 2020. So it's definitely undervalued compared to where it's been in the past, for sure. Very undervalued, right? On average, it tends to be higher than 150 in this metric. Right now, it's 123. I want to say my biggest red flag for this company is that balance sheet. So I would really have to be super bullish on the market they're hitting for me to even think about entering a position like this. But besides that, things don't look too bad. And I forgot who was it. Stelios, right? So hope you enjoyed that. George, Chris, what happened with Curiosity Stream? So Curiosity Stream is one I've talked about a lot. This is a tier 1 stock in my portfolio. Right now, I do believe it is one of those heavily shorted stocks. So it's kind of been uptrending due to those reasons. Overall, I'm still a position in Curiosity Stream. It is a tier 3 stock in my portfolio. At the moment, I have no intentions of adding, just because I'd rather add to my tier 1 stocks and my tier 2 stocks before going on to my tier 3 stocks. Again, if Curiosity Stream is one that does well, it could be a multi-bagger in my portfolio. If it doesn't do that well, it'll be okay. I had some skin in the game. I won't lose too much. But this is one that, not this one, Curies, CRIS. Let's take a look. Curies, okay. Whew. Definitely taking quite a hit. I'm not sure. What do they do? So let's take a look at Curies. Stock is down 35%. What market is this in? So this is the main reason. George, welcome along. George, Chris. 2 of my best friends. One's named George and one is named Chris. So cool to see that. The biotech market is not one I follow too much, and for reasons like this, I'm guessing something happened with a product that they're working with. It might have not gotten some form of improvement. And when that happens, stocks like this tend to drop really high, 35.29%. Let's see. They don't mention I would definitely say if you have a broker, take a look at what that broker does. They usually share good information. I can't log into mine because then you guys will see all my account numbers. But this is definitely one that I think you should try to understand a little bit more. The biotechnology companies, these are markets that are super volatile, right? Any news can really move the stock price. What's going on, Zachary? How's it going? And I haven't forgotten to message you. I've just been on my grind recently, but Zach, expect something from me in the near future. But guys, this is I'm Zach. I'm pretty sure you just joined, but guys, appreciate the support. I gotta go work on some videos right now, work on some other stuff. Thanks for the support, guys. I'll see you guys on Monday. Live streaming, I'll be on at 10 o'clock Eastern time. Today was a bit later than normal. I had to go do some stuff. But thank you guys so much for the support. I really do appreciate it. Have a good weekend. Spend time with the family. Best of luck with your investment. And remember, as long-term investors, whatever happens today, whatever happens on Monday is just noise. We're here for the long term of things. So take care, guys, and see you next time.